Are you a UK tax resident? It sounds like a simple question, doesn't it? But the answer can be incredibly complex, and honestly, getting it wrong can be a very expensive mistake. So, whether you're moving to the UK, thinking about leaving, or just spending time here for work, your residency status is absolutely critical. That's why the experts at My Tax Accountant have helped us put together this guide to the UK's Statutory Residence Test, or SRT, to give you the clarity you really need.
So why the big rush to understand this right now? Well, take a look at this number, 16,500. That's the record number of millionaires expected to leave the UK. It is a huge shift, and it's being driven by major tax changes that are making everyone, not just the super wealthy, take a hard look at their situation. And this isn't just a story about millionaires. Not at all. With the old non-dom regime gone since April 2025, the entire landscape has changed. For anyone with international ties, this is a real game changer. It means knowing for certain whether you're a UK tax resident has never, ever been more important. To give you that certainty, we've broken this down into 6 clear parts. We'll kick things off with why your days in the UK matter, then walk you through the automatic tests and the more fiddly UK ties. We'll also uncover some hidden traps, explain what happens if you move mid-year, and wrap up with how to make sure you get it right. Okay, first things first, the fundamentals. What exactly is this statutory residence test? Well, before 2013, the rules were a mess, a confusing mix of old court cases. The SRT was brought in to replace all that uncertainty with a clear, objective set of rules. It's designed to give you a definitive answer based on 2 things: how many days you spend in the UK and what your connections are to the country. And believe me, the stakes could not be higher. If the SRT says you're a UK resident, you're taxed on your worldwide income and gains. Everything. But if you're a non-resident, you're generally only taxed on income that comes from the UK. The difference is absolutely enormous, and this one test decides which side of the line you fall on. So, how does the test actually work? I know it can seem complicated, but it's actually a very logical, step-by-step process. The absolute key, though, is to follow the steps in the right order. Let's take a look. Think of the SRT as a 3-stage flowchart. First, you check the automatic overseas tests. If you meet just one of these, you stop right there. You are officially non-resident for the tax year. Simple as that. If you don't, you move to stage 2, the automatic UK tests. If you meet one of those, you stop. You're a UK resident. And only if you still don't have a clear answer do you move on to the final, most detailed part, the sufficient ties test. All right, let's start with those automatic overseas tests. Think of these as your fast track to confirming you're non-resident. If you were a resident here in the last 3 years, you need to spend fewer than 16 days in the UK. If you weren't, you get a bit more leeway, fewer than 46 days. There's also a specific test for people working full-time abroad. If any one of these applies to you, job done, you're confirmed as non-resident. Now, if those overseas tests don't get you a clear answer, you move on to the automatic UK tests. These are just as straightforward. The most famous one is the 183-day rule. If you spend half the tax year or more here, you are automatically a UK resident. End of story. The other 2 are pretty clear too. If your only home is in the UK or you work full-time here, you're also automatically resident. Okay, so if you've gone through both automatic tests and still don't have an answer, you've arrived at the most nuanced part of the SRT, the sufficient ties test. This is where the details of your life, your family, your home, your job, get combined with the number of days you spend here to give you that final result. There are 5 possible ties to consider. First up is the family tie. This kicks in if your spouse, civil partner, or a child under 18 is a UK resident. So yeah, your family's status can directly affect yours. But there's a really important exception. If your child is only in the UK for full-time education and doesn't spend much time with you here outside of school holidays, that generally won't create a family tie. Next up is the accommodation tie. This is triggered if you have a place to live in the UK that's available to you for at least 91 days in a row, and you spend at least one night there. This could be a flat you own or even rent. Now, here's a pro tip. Staying with a close relative like your parents is different. That only creates an accommodation tie if you stay there for 16 nights or more in the tax year. The third one is the work tie. You'll have this if you work in the UK for more than 3 hours a day on 40 or more days during the tax year. Now, that's roughly 8 working weeks. And the crucial thing here is, this isn't about having a full-time job. Even part-time work or freelance projects, if they're spread over enough days, can create this tie. For For example, if you're a director of a company, just coming to the UK for board meetings could count towards this total. Fourth, we have the 90-day tie. This one looks backwards into your past. If you spent more than 90 days in the UK in either of the last 2 tax years, you'll have this tie. It just goes to show how your history in the UK can affect your current status, making it a bit trickier to become non-resident if you've spent a lot of time here before. And finally, the country tie. This one is quite specific. It generally only applies to people who were recently UK resident and are now trying to leave, what HMRC calls leavers. You'll have this tie if you spend more nights in the UK than in any other single country during the tax year. It's really designed to catch people who are very mobile but still use the UK as their main base. So how do all these ties and your day count actually come together for a final answer? Well, it's all about this table. Think of it as a sliding scale. The more days you spent in the UK, the fewer ties you need to be considered a resident. For instance, if you're here for between 46 and 90 days, you need 3 ties to be resident. But if you spend over 120 days here, just one single tie is enough to tip you over the edge. This table is the real heart of the sufficient ties test. That's not all, though. Here's where most people go wrong. Beyond the main tests, there are some really complex rules that can catch you out. So stay with me. This next point might actually surprise you. It's all about how a day is even counted in the first place. You'd probably think that if you're not physically in the UK at midnight, that day doesn't count towards your total. And most of the time, you'd be right. But there's a hidden trap called the deeming rule that can turn a day you leave the UK into a full UK day for your tally, even if you're long gone by midnight. It's a crucial detail that you really need to understand. So when does this rule kick in? Well, 3 things all have to be true. First, you were a UK resident in one of the last 3 years. Second, you have at least 3 UK ties this year. And third, you have more than 30 qualifying days. Basically, these are days you spend some time here before you leave. If you tick all 3 boxes, every single departure day after your 30th is deemed to be a full day spent in the UK. This can easily push you over a critical day count threshold without you even knowing it. Now for a helpful pro tip on the flip side. What if you get stuck in the UK for reasons that are totally beyond your control? The rules do allow for exceptional circumstances. Up to 60 days can actually be ignored in your day count for things like a sudden illness or a family emergency. In fact, a recent court case ruled that a person's moral duty to care for a very ill relative counted as exceptional. Just be aware, the bar for this is set extremely high. So what happens if you move to or from the UK partway through the tax year, which runs from April 6th to April 5th? Are you on the hook for the entire year? Not necessarily. This is where a really important rule called split year treatment comes into play. And the benefit of this is just huge. Without split year treatment, if you're a UK resident, you're a resident for the entire tax year. That could mean paying UK tax on your worldwide income all the way back to the previous April, even before you'd set foot in the country. But if you qualify for this, the tax year is literally split into an overseas part where you're taxed as a non-resident and a UK part where you're taxed as a resident. It's an absolute lifeline for anyone moving internationally. We've covered a lot of ground, from the automatic tests to those sneaky hidden traps. Now, let's talk about the final crucial step, getting it right. The SRT is a self-assessment system, which means the responsibility is entirely on you to figure out your status correctly. And the penalties for getting it wrong? Well, they can be severe. Just how severe? Well, for a deliberate mistake, the penalty can be up to 100% of the tax you failed to pay, and that's on top of having to pay the original tax bill plus interest. It really drives home how critical it is to be on top of your day counting and your UK ties. Now, it's really important for me to say that the information in this guide is for general guidance only. The SRT rules are incredibly complex, and everyone's personal situation is unique. So please don't rely on this alone to make big financial decisions. So we end with a question for you. After seeing how the tests, the ties, and all those hidden rules work together, are you absolutely confident you're tracking your days correctly? Are you certain about your residency status for this tax year? If you have any doubt at all, the best thing you can do is seek expert help. The specialists at My Tax Accountant can help you get your residency status right, plan your UK visits to avoid nasty tax surprises, and navigate all the complexities like split years and that deeming rule. You can get in touch with them on 020-8570-8531 or by email at info@mytaxaccountant.co.uk. And for more updates like this, make sure you subscribe to their YouTube channel. Thanks for watching.